What's going on, everybody? Welcome to the Wednesday, February 27th trading recap here at Alpaca Trading. My name is Ruben, and I am very excited about today because we have a lot of stuff to go over. I'm going to try to be as detailed, but also as and thorough, but also as quickly as possible because we have, almost 10 stocks to go over. All of them, very different from each other. Some of them are swings, some of them are day trades, and this is going to give us a great overall kind of feel to both strategies. And before I start, I just want to make a quick note to everybody. If you guys want to be successful in this trading, crazy world of trading, you have to constantly learn. Okay, if you repeat the same mistake over and over and over again, if things aren't going well for you, it's going to continue that way until you make a change. That change comes with education, understanding why things happen the way they do. So these trading recaps, the way that we are designing them is not just to show you, oh, hey, we entered here, or hey, we exited here, and this is where you should enter, this is where you should exit, and this is where you can take profit. No, we are actually analyzing the market and the stock as a whole for you to really understand what happens in real time so that you can pretty much piece everything together so that you can understand the big picture, okay? Because sometimes, people will enter just based on a number without really understanding why they're entering based on a number. And if you would understand why you're entering, where you're entering, you would be confident and you would not panic sell, and you would just give the stock room to breathe. Okay, so please pay attention to these to this trading recaps. Take as much notes as you can. I'm here to help you guys out. I'm here to answer your questions, but I need you guys to do your part. I need you guys to really watch these videos and learn. I get a lot of questions on a daily basis by a lot of people still asking me, what is confirmation? And by now, everybody should know what is confirmation. As a matter of fact, I am going to make a separate video about just confirming and knowing when to enter based on that number that we give you guys, okay? So just watch on the Discord chat app for a link to that separate video. Okay, so with that being said, let's go ahead and start with Procter & Gamble. This is a stock that Kayla, I believe it was yesterday morning, she was looking at PG for a possible put. So the first thing we want to do, obviously, is look at the daily chart, right? We want to look at a big picture of what PG is doing. So if I come in never having looked at PG before, okay, what do I see here? Well, PG is on a constant uptrend, right? Yeah, it's had its ups and downs, but if you just notice, at no point has there ever been, any indication that this stock is not continuing to go up. All right, so maybe here there could have been kind of an instance of a downtrend, or this kind of momentum switching over to the downside, because again, it created a almost a lower low, but as you can see, actually, my bad, it didn't. So it's been on a continuous uptrend, as you guys can see here. It bounced off the 200 right here. As you guys can see, this is, it tried to go under it, but it didn't. It tried to, it would have basically been on a downtrend if it would have basically gone below this candle right here, but it didn't. So the chart continues to be making higher highs. Again, it's not a perfect graph, but you guys get the point. So now we're over here where the other day PG reached a high of $100.45 after a very long period of a slight uptrend. But as you guys can see here, the stock has been consolidating. So what do we look like? What do we look for when we are about to see a change or a downtrend in the direction of the stock? Well, if the high is $100.45, okay, this means that this area right here, okay, is an area of resistance, okay? So this entire area right here, it just needs to cross above it, and it needs to continue going up in order for the stock to stay healthy. Anytime you guys see a chart or a candlestick pattern especially, okay, is very, very important, and is has much more significance when it happens at an area that is near a key resistance or a key support level. Okay, so for example, right here or right here, when the stock is trading in the middle of a support and resistance, if I see a doji, if I see a bearish or a bullish harami or a pattern like that, I don't care. What matters is looking at things when they are near their key resistance or support lines, which we saw right here in the past. So this was today, but in the past 3 days, we saw this candlestick pattern right here. Okay, so this, okay, is a bullish, a bearish engulfing candle. What does that mean? It means that the entire body of this red candle, okay, is kind of eating the body of this candle right here. That signifies that something's about to happen. Okay, so again, look into the future. We had a doji here, a lot of indecision, and then now today the stock pretty much started on a downtrend, right? So look at how this bearish engulfing gapped up, right, on that day. So it opened higher than the previous close, and then it closed lower than the previous close. So this is what we call a bearish engulfing candlestick pattern. And again, the next day it was confirmed, and now the stock started going down. So again, this is a swing play which you can really enter at any time. I mean, you can wait for a high to hit. You know, like for example, if you've drawn a line of resistance around here because of all these candles, and the stock happens to hit a high or a high a day, yeah, you could enter there and take the best possible profit. But when we are swing trading, we don't really care so much about, you know, entering 10 cents too early or 10 cents too late or just chasing the stock. No, because you're swing trading and you're holding this over a period of a couple of days, we don't care about the 5 cents or the 10 cents. We just enter when we go into the let's say the 1 day 5 minute, right? And we look at what's happening, right? Okay, it hit the highs here, but because we are pretty certain that the stock is going to start on a downtrend, we could have entered anywhere here. Okay, where does a swing trader make their money? They make their money based on the stock gapping down the next day, and then the next day, and then the next day. Okay, the profit taking is happening while you're sleeping, because we are betting that on a downtrend the stock is not going to gap down, it's going to open lower than the previous close. This entire area right here, so between here and here, is where you would have woken up no matter where you enter the stock right here, and you would have made money. So do you see what I'm saying? It doesn't matter where you enter here, because based on the technical analysis that we did, you would have made money at the open. Okay, now do you sell at the open? Like, okay, you got some profit here. What was it? Like maybe let me see here. You made let's say you would have entered at the last minute when the stock kind of closed, right? And you would have pretty much, let's say, open right around down here, 99.33. That's about 0.5% or 51 cents. A stock like PG, that's not very volatile, that doesn't move that much, the option put contract on this would have made you money, right? The wick even went all the way down to another 0.10%. Eventually the stock went all the way down to 98.82, which would have given you an entire dollar or entire percentage point. Okay, So again, for swing plays, we don't care so much about the intraday stuff because we don't have the time to be in front of the computer nonstop every minute like day traders, which is why swing trading is a little bit safer and a little bit more conservative because you now know if the stock goes against your favor. So let's say if you would have entered at the high here, right? If the stock would have reversed here, the moment it crosses above $100.18, that's it. You exit. This is not a day trade. You exit and you move on to the next trade. Okay. So I'm looking at PG right now, and it's most likely going to continue with this downtrend. You know, again, everything I've told you is based only on price action. I haven't even touched on the RSI or the MACD. All right. So that's just something to think about. I'll go ahead and go over to the next swing trade calls. So we have Apple. Let me see if I can get this. Excuse me, not Apple. American Airlines. So American Airlines, Mike said, to go into a call above 36.93. So 36.93 did not happen today. Therefore, this play is still in the works. The stock did not really do anything today. Here is basically the reason why we have the 36.93, because it has formed a huge resistance on the daily chart around that mark. Did it hit it today? No. So we're just going to be patient and wait. And this is a stock that we're going to be watching. Same thing with AXP. So we look at American Express. There was a put and with an entry close below 106.50. Again, that did not happen today, and the wick almost even touched it, but it didn't happen. So again, a swing play is something that we want to be watching over the course of a couple of days, over a week, and we patiently wait for this to basically break through, because we understand that if it breaks this support right here, it's going to come down. All right. Same thing with Goldman Sachs. There was a call above 203.50. Has not happened yet. So again, we're patiently waiting for that. Again, you see the resistance that it has formed around here. So again, that was not something that hit today. And then last but not least, Nike Mike said, let's see here. Basically said anywhere above the $86 area, enter a call. Did that happen today? Yes. It basically closed very close to like about 22 cents above 86. So it confirmed with this kind of green candle. So tomorrow you want to watch and see what happens, and potentially if it continues going up above 86, this would be a good swing entry. Again, a swing, not a day trade. So if you're going to swing, you already have to have a predetermined plan for when to exit or where to set your stop loss, right? So if the break and hold was 86, you would maybe put your stop loss just below that line, right? So would you put it at 85.99? No. Would you put it at 85.90? No. Would you maybe put it around the break of the 6 EMA? Yes. And even maybe a few cents below that, right? Because the market makers are going to assume, and they can see where everybody put their stop losses, right? People that are really conservative with their stop losses get stopped out all the time because they put their stop losses too tight, okay? So Nike has been on has had such strong momentum, right? Such strong momentum. So therefore, we are capitalizing on the fact that there's a resistance here, here, and here. If it breaks through this resistance, let me see if I zoom back. If it breaks through this resistance, the stock is going to go on another rally. So therefore, set your stop loss just below the EMA. And you know what? If it hits it, fine. You were wrong. But at least the probabilities were in your favor. This is all about probabilities. All right, so again, tomorrow, watch out for Nike because that may be a really, really nice play. All right, MMM, 3M company. Mike said break of trend RSI, break of trend on chart, a little less risky. So as you can see, MMM has created on the daily chart what we call a double bottom. As you can see here, this is a bullish kind of chart pattern. We're looking at a break of pattern again, which happens when it breaks. So let's see if I draw a line somewhere around like this. You would want to see a break. So again, as long as it goes above and confirms above this line, if I draw the line between this area and this area, the stock could basically continue moving up. Has it done that yet? Not really. You want, a much nicer confirmation than this. So again, this is something that we are still looking at for a potential swing. All right, let's move over to the intraday picks, and let's see, now we're gonna go into a more surgical approach to the trading because these were all day trades. So we'll start with AMD. Let's see here. AMD call entry above 23.57. So let me see here. We're gonna go into the 1 day 1 minute, and it was a call above 23.57, which is the line that I drew right around here. Okay, so as you can see, the stock basically once the stock market opened, the stock went on a huge sell-off, and then eventually consolidated, and then it went back up. And then at some point, it created a huge line of support around this area. And Mike at around 8:05, so that was at around 11:05. So the reason why I'm saying 8:05 is because I'm on the West Coast, so I'm like kind of trying to do both Pacific and Eastern time at the same time. So at around 11:05 a.m., he basically said an AMD call if it breaks above 23.57. So the reason why he did that is because this area right here had created a huge area of resistance, and then again it came down, and then it never broke through here until we came to this area right here. Okay, so let's watch this absolute mess of a play, because again, there is just so much stuff going on here. The stock is just continuously retesting this 23.57. We have the 200, the 50, the 6, and the 12 in that war zone that we do not want to touch. Until when? Well, somewhere around here. So they took, let's see, it did not confirm here. I mean, it confirmed here. It did not go below it. It went below it here. It went below it here. And then, as you can see, it just traded sideways. So, I mean, you could have entered right here on that confirmation, right? And you could have just been patient with it, okay? But as you can see, as it's getting to this area of 23.57, you're getting pretty close to all of these, of the SMAs and the EMAs. So what I would do is I really would want to wait for the stock to be a little bit less busy. Okay, so basically you want to at some point either tell yourself, okay, I'm either going to take a little bit of risk and I am going to accept the fact that AMD is just going to retest this area of resistance several times, meaning that the stock may go down, go up, go down, go up, trusting that because it broke through that area of resistance once and twice, okay, it's eventually going to come back up, okay? So that is a risky play. Now, if you would have just waited, you could have entered somewhere around here. And why do I say that? because as you can see, here is what we like to see, that 45-degree angle wave that rides all the way up, where all of the candles are above the 6 and the 12, they're above the 50, they're above the 200. Okay, so yeah, if you would have entered here and you would have been patient, okay, you would have made about a percentage point, you know, or 17 cents in the stock, which is not a lot. But again, this is about you understanding the process. Okay, as you can see here, it created a double top. Here's a neckline right around here. You can see it went all the way back, tested that support line. That was the old resistance, bounced back off of it, tried again, and eventually it came and crossed over, and then it closed below it. Again, going below the 6 and the 12. So would this have been a good play today? Yes and no. But again, this is a day trade, so you have to have your emotions in check. Again, I mean, if you really notice, the big move, honestly, happened here. All right, for a put. So again, everybody that swinged AMD from the day before and shorted it would have made money on that swing, which is why ask yourself, do you want to swing or do you want to day trade? When you day trade, your chances of making, consistent profits is connected to your emotions and your ability to understand that everything happens really, really fast. What do I mean by that? Well, hey, you could have made money here. You could have shorted it here. Again, made money. You see this kind of doji here. Boom. Short. Make money. Short. Make money. Short. I mean, that is what day traders do. Okay. But again, for us, we just want a clear understanding of what the stock is doing. And again, you could have entered and made some money right here. Not a very good play, but again, the numbers were correct and it broke above it, and this is where you could have exited. Okay, so let's go over to CVX, which is Chevron. So Chevron, again, this was a put by Mike with an entry below 121.07. Why did he do 121.07? Because as soon as this huge rally happened, the stock started consolidating and it touched that 107 several times and it bounced right off of it. So as you can see, it's building an area here of consolidation, and eventually it broke below it with these two bearish engulfing candles, and then it tried to test it with this candle right here. You see the wick touching the 121.07, and then it just was not able to go above it. And then eventually, if you would have been patient and held all the way till the end, you would have gone from basically, let's see, 121.07, or let's say just a little bit below that because you want confirmation. So maybe in this red candle you would have entered. So let's say 121.02 down to 119.99 or about 120. So about $1 move. Most people would have sold right here. They're like, oh crap, it's just gonna come right back up. But it's, again, look at the patience that's needed. It tried to test that old line of support, which now became the resistance, and you need to give the stock the chance to test it again. Okay, sometimes it may go up again, right, and it may come back down. In this case, it tested it, it got rejected, and the stock kept trading down. So actually, as a matter of fact, right here, if you would enter it somewhere right here, you could have just taken profit around here, because as you can see, it bounced off that 200 SMA. Okay, so again, remembering this, the 12 and the 6 EMA, it's trading below it, it's trading below the 50, then using the next kind of line of support there with the 200 SMA. Okay, let's see here. Baba, this was Kayla that put this. She said a Baba put at around 8:27 a.m. Pacific, so that's about 11:27 a.m. So let's see. So right around here, she noticed that it formed a support line right here because of this. Let's say it's a 1, 2, 3, 4 times that it tried to break it. It didn't, and then BABA just kind of continued on an uptrend. So it was a put that was announced, not a call. Could you have found a way to make money go in the opposite direction? Yes. What can you see in this chart? What kind of chart pattern can you see here that would have told you, hey, I could maybe enter a call here? Well, you have what looks like a double bottom right here. Okay. Now remember, when you're looking at chart patterns, they're not as accurate on the intraday charts as they are on the daily chart, but they still explain the same psychology behind what's happening. It means that the stock is trying to hit that support twice, gets rejected by it, and then it creates this double bottom, and then it kind of shoots back up, right? So let's just see, when you guys see photos and pictures and diagrams of a double bottom, it doesn't look like this. It looks much, much cleaner, but you have to understand that it's not always going to look exactly like a picture. The point is, you have two tops, one here and one here, and you have a neckline right here, and you have one bottom right here and one bottom right here. And if you draw kind of like a middle point here, the distance between these legs are kind of similar to each other in terms of its length if you would cut it in half. So here's a double bottom. You have this bullish engulfing candle right here, and the stock just went on a continuous uptrend from here. And if you would have entered probably around the break of, so maybe around this candle right here, you would have made let's see, around $1.13 in that contract. So why am I explaining this to you? Because I want you to be able to start making your own plays without just saying, oh, well, you know, Kayla said Baba put, well, it's now going the opposite direction, so I'm just not going to touch it. No, if you see an opportunity with price action, feel free to take a call. Just draw your lines of support and draw your lines of resistance, right? So again, right around here would have been a good line of resistance. You know, just looking at the fact that it's creating a double bottom, and then you would have entered somewhere around here. All right, the next one is Delta Airlines. Mike said call above 50.36. It tried to break it here. It went a little bit above it, and then eventually it kind of started trading sideways. Again, it tested it, but it was, again, kind of trading sideways. So not much of a play right there, but again, not all of these are going to work. If you would have swing traded Delta, so let's say if we go back to the 1 day, you could have seen here that the past 3 days you have seen, you know, a bunch of red candles with increasing volume. If we look at the the RSI, it's showing some let me just draw this right. It's showing some bearish divergence right there, even though it's trading around the same area, and then increase in volume as the stock comes down. And then you could pretty much see there that also on the MACD, this is reversing. You can see that Delta was going to go on a downward trajectory. Look at this candle right here. What does this candle mean? Well, this was the top of the wick right here, right? So at 51.96, this was the high of the day for yesterday, okay? But notice how the bears just pushed it all the way down. Okay, there is this push where they said, okay, yeah, I understand you had a high, but no, we're in control, we're in control. Down we go in the elevator, and we are going to close it right around here. Okay, so you want to see the story that is being told by these candles. Okay, the indecision started right here. Okay, the indecision started right here. And as you can see, the stock just basically came down over the next couple of days, and you could have made money here, here, here. And again, if you go into the daily, it gapped down, and then it came all the way down here, and this is where you again would have made more money. So you can see here, during after hours, it tried to break that 200 SMA. It didn't. So who knows what's going to happen with Delta tomorrow? But again, it looks like it's on a new downtrend. So puts for Delta would be good unless you see a confirmation that it's going the other way. But just looking at that bearish divergence, at the fact that the signal line and the MACD line are about to meet, or looks like they're about to meet, and again, increased volume on this candle, it just means that it's most likely gonna just continue going down. What I also like to do is look at live news. Is there anything that could have caused this to happen, right? I'll just go over everything. As you can see here, there was at 10 o'clock, Delta Airlines to present at JP Morgan Aviation Transportation Industrials Conference, but there wasn't really anything major, that happened, except the fact that over like the government shutdown, it created a lot of hurt really for the airlines, because there was a lot of employees that weren't traveling anymore, a lot of government employees that weren't traveling anymore, and that may eventually take a cut of their profits in the next quarter. So everyone's kind of thinking about that, but again, there was no major catalyst that created this candle, besides the fact that a stock is just going to move up and down all the time. But our job is to find the swings, whether they're 2 days, 3 days, a week, and then capitalize off of there. So what am I looking at, Delta, right here? There's basically an area of support around this 49.67, which it kind of flirted with today. So if Delta goes below pretty much this range here between 49.87 and 49.63, it's now can come down all the way down to the next level of $48.50, and so on and so on. So again, look at the big picture, always look at the daily chart, and then go into the intraday to see what's going on. All right, next one is Disney. This is another play that did not really work out today. Mike put a put on Disney below 112.47. As you can see, it tried to go through it once, twice, 3 times. It didn't happen. But the day before, it was at $114, and it basically lost about $1.50 as it gapped down for the next day. If we go back and look at the 1 year daily chart, holy moly, what do we have here? Well, notice 3 days ago that Disney did not break through this area of resistance right here. Around this area, again, this can also be a range. And what do we have here? Oh, well, again, a bearish engulfing candlestick pattern near an area of resistance. What did it do the next day? Boom, boom. So again, this is technical analysis. This is us understanding chart patterns and understanding that price history dictates that if we see something like this 3 days ago, this is most likely going to happen. So again, swing trading, right? 3, 4-5 days versus day trading where it was just continuously trading sideways. Where would you have made your money in this case? Hey, you would have made your money right here after this candle. Okay, you could have made your money here and here. So if you would have entered 3 days ago, boom, you would have made money. Okay, so again, don't worry so much about the stock going against your favor. Set your stop loss at an area that you feel comfortable, but understand that stop losses are there to protect your account. Do not bag hold a stock that is going against your favor, right? So if you would have entered here 3 days ago, let's say, right, and the stock starts kind of showing an uptrend for whatever reason, give it time to find its direction. Okay, give it time. So again, if you enter a swing play just buying the stock itself or shorting the stock itself, you're giving yourself less risk because you are not fighting against that time decay for an option. Okay, because the stock may take, look at how many days the stock was kind of playing around. 1, 2, 3, 4, 5, 6 days, right? Trading around the same range right here. Can you imagine somebody holding an option contract right here? Holy crap. I mean, that would drive people crazy, right? Because the stock is not doing anything. But notice how it's bouncing off the 50. So if you would have entered here on a swing, you're covered, okay? Because you're going to set your stop loss a little bit above it, right? If you're going to short, maybe around here. And now you can just shut down your computer and not even worry about it because your stop loss is going to protect you. As you can see, about a week later, it tried. Would it have stopped you out? Yes. Would the stock would have come down again? Yes. But the point is, this right here is where you would have taken your profit. Why? Because it's bouncing off the SMA and it's showing you this candle right here, which is not a very healthy stock. Excuse me, not a very healthy candle if you want to continue shorting it, because you don't know what's going to happen the next day. Besides the fact that the bulls it was the opposite of the previous candle that I showed you. The bulls just pushed this candle all the way up. Now, all these candles have names, right? You can have like a bearish harami pattern, a bullish harami pattern, an engulfing, this, that, a doji, a hammer, all that stuff. It's not about the names. It is about you recognizing what these candles are doing and understanding the story, right? What's this candle right here? Okay, it's indecision. The price stayed the same even though bulls try to push it up, bears try to push it down. It pretty much opened and closed at around the same range. Indecision. Indecision. Again, indecision. These right here, because of the wick is, twice as long as the actual body, especially this one, we see that the bulls are trying to take over. The stock reached a low right here, but it closed right around here, which means that there was a lot of bullish action, and that confirmed the next day with this candle. Okay, so again, understanding the story behind the chart is extremely important. I think that is it for today. Let me look at if there's anything that I missed. Option plays. Yesterday, let's look at Amazon real quick. Amazon calls over 1640 tomorrow. All right. So not really a good play because it opened up so low, like it just came all the way down here. So again, the market is just really trading sideways, because it's just the market is trying to find its direction right now. Baba calls over 184.33. Again, 184.33 is right around here. Yes, you could have made a little bit of money. Again, it's really difficult. Like I said, like I've told you guys in the chat before, let's look at JPM, that until this trade deal gets a good direction, we're going to see this continuous just sideways action. We're not getting much action right now. And this is just because the market is trying to figure out where it's going to go. Let's look at SPY real quick before I leave, before I let you guys go, and see what SPY is doing on the daily. All right, so 3 days ago, SPY hit that retracement level of, let's see here. Yeah, the 78.6 retracement level, it bounced off of there, and now it has basically come down since then, and it has not reached that new high yet. So the consensus is that SPY should be coming down and retesting a lower level, either the 263.85 or at least a 270. But as of now, the wick closed, or the candle closed above that 6 EMA on the daily, which means that it is still holding above the 6 EMA. So we're just gonna have to wait and see if the stock is going to move up in this direction, or if it's just gonna continue and maybe touch on the 270 and then the 263. So I hope this explained a lot of things. I'm gonna start working on that confirmation video now, and I will see you guys tomorrow. If you guys have any questions, please feel free to ask under Ask the Pros, and I will see you guys later.